Today is November 27th, 2023, and this is your Monday market update. The last Monday in November this year. Last week was a holiday shortened week, but not without its share of fireworks. There was a lot of news flow, but let's review what happened in last week and preview this week, the last week of November. Monday markets opened a bit confused in the news front, and really overall, pretty much little was changed from where it ended on Friday. A slight bias to the buy side, not so much news over the weekend. Geopolitics did heat up a bit. Iranian-backed Houthi rebels seized a cargo ship, reportedly not an Israeli vessel, but it was linked to Israel in some way. It meant more to the idea that the oil supply moving through those waters was back in play. That did have oil move up a bit. No question in my mind, the market is still not pricing in any major problems over there. Confusion was all about OpenAI and its co-founder. They ousted him, then he landed at Microsoft, or did he? Not a lot of answers, and since AI has been the key to this 2023 tech market move, there were a lot of questions. Again, the market paid no attention. The news of the day was the 20-year Treasury auction, and it went well. Recall that the rough 30-year auction last week was a headwind. This worked as a tailwind at this time. By the end of the day, oil was up 2.25%, copper was up almost 2%, the dollar was still sliding towards 102, and all of that, the Dow was up over 0.5%, S&P up 0.75%, the NASDAQ was up just under 1.25%. Stocks did open lower on Tuesday, and that was in the face of all of that FOMO and momentum. Oil did give back some of the gains, down 0.5%. Again, not pricing in any spread of the conflict in the Middle East. It does amaze me what this market reacts to and doesn't react to. Just in the first 2 days of the week, no reaction to the fact that Microsoft, which owns 49% of OpenAI, could have potentially hired the co-founder, as the company that was recently valued at $80 billion in the private funding rounds was potentially seeing its value walk out the door. And its co-founder and in many of its employees, who, according to some reports, have salary matching offers from elsewhere already lined up. It is unknown if OpenAI is worth even a fraction of its $80 billion once this dust settles, but take no notice. Microsoft losing maybe $40 billion on paper, no matter, the stock went up. But on the other hand, Jeff Bezos, the Amazon founder, sold another $1 billion worth of his company stock, which, by the way, he has made clear he does annually to fund his space venture Blue Origin, and the stock goes down 2%. Go figure. Fed minutes were the soup du jour, and those came out midday. Not so much earth-shattering news here. Still no talk about rate cuts, talk about the market pricing in some things and not others. The market seems to be pricing in early 2024 rate cuts, and that may be news to the Fed. As Quincy Crosby from LPL Research said, the Fed still has an ongoing inflation concern, and that concern that a major growth slowdown will be what brings about a rate cut, maybe by summer of next year. By the end of the day, the Dow was down almost 0.25%. The S&P was also down about 0.25%, and the NASDAQ was down a bit over 0.5%. S&P and NASDAQ snapping a 5-day win streak. After the close, analysts finally were able to breathe. NVIDIA earnings were out, and as expected, the bar was set high, and they leapt right over it, outperformed in most measures. The reaction at this point to the news almost missed the video today. So suffice it to say, excitement and the target prices are all up, but the stock did not do too much. It seems that the run-up and the actions may be pricing in current and future events for now. The good news is that their news was solid, so it did not derail anything. After a few hours to think about it, the markets opened higher on Wednesday morning. Low liquidity as traders took off for the holiday was the story, but regardless of what you say about it, it still counts. Soft eco data led stocks higher. Yes, again, bad news is good news for the markets. I'm sure we'll hit on this a lot in the coming months. Bad eco data, Fed is done raising, and they will be cutting soon. That's the market translation. Jobs numbers were the one. Lower new claims were ignored in favor of continuing claims numbers. That was a multi-year high, and that looks like it should lead to a higher unemployment rate. Remember the talk a couple of months ago that the Fed wanted 7% unemployment? Don't count on that, but a rising rate from the mid-threes is in their narrative. University of Michigan inflation expectations came out and threw cold water on the market. Hot inflation expectations. Why is this a problem? I think I've mentioned it before, but as LPL Chief Global Strategist Quincy Crosby, I've mentioned her before, as she says, if inflation expectations are high, then people think prices are going to keep going up. And so buy it now becomes the key, since prices will only go up from here. That this feeds inflation, the inflation circle, and the Fed does not like this. So This stopped the move up, and the market churned its way into the holiday, closed in the middle of the range. All three markets closed up about 0.5%. Thursday was the day off of the markets for all to give thanks, maybe even for those solid 2023 market returns to date. Mostly for all of the other things. I'll leave that to each of you, but suffice it to say, this is another year that I count my blessings. Friday was a short trading day, and so many were off the desks. Eco data was mixed, thus not enough to cause any real action. Data points to soft landing, so markets spent the short day churning around. There was not so much to report. Dow was up 1/3%, S&P up slightly, and the Nasdaq was down slightly. For the week, the markets ended higher again. The Dow was up almost 1.25%, the S&P just under 1%, and the Nasdaq was just over 0.75%. For those worried about the top-heavy S&P, like me, a few facts to consider. The price-earnings ratio of the top 5 companies in the S&P is over 34, and the remaining 495 is just under 19. In addition, this past week we saw more of this market broadening out. The 55% of the S&P 500 stocks are trading above their 200-day moving average, and even the equal weight S&P was up 3.25% last week. So yes, we are still having leadership in the big 5 to 7 stocks, but we're getting some more to come to play also. This coming week is a lot, but all eyes will be on a few items. We'll get PCE, the data point that the Fed loves to watch so much. That'll be on Thursday, and Powell's speech come on Friday. We'll also get some other eco data. GDP expected to be up about 5%. Now, just recall that has to have that to have the pending recession everybody's talking about, that GDP number needs to go negative for 2 quarters in a row, at least by definition. Jobless claims will be out again, and we'll get some housing data. Not to be left out, we'll hear from Goolsbee, Waller, Mester, Cook, and as I mentioned, Powell from the Fed. One more item that may be in focus is that Beige Book due out Wednesday, but we'll have to see if that gets forgotten. Add in a few stragglers on the earnings front, and don't forget all the talk about Black Friday and Cyber Monday. This week is set to be interesting, and I actually think the probable surprises will be in play. Yes, OPEC should hold their delayed meeting, so watch for that news. And tied into that somewhere is, of course, the Middle East news and the war in Israel. Please don't forget that with the great news of some hostages coming home, there are still close to 200 hostages that are being held. Please keep them in your thoughts. Come back on Friday with some year-end planning ideas, and please call me with any questions. Have a great week.